Evaluating your business worth. What's really awesome about this is that's going to help you figure out some of the key things that buyers are looking at, inspecting, and things that are going to help you achieve what you want and in your valuation of your company. So, we're going to take you through some of the critical steps. First off, financial records, hugely important. QuickBooks is great. And then also, something I want to also tell you about is there's software for the industry. There's many different software programs that work with your company that will be able to document the job locations, when people clean them, when they log in, log out, give accurate reports on the hours and the time to clean it, how often it's being done. Those things right there make a significant difference because someone can just take a course of how to study that software and then quickly can find out key information. Also, it makes it very easy for you to share that information, and that's part of the valuation of the financials, is just simply them being able to see how many hours and the data that's going into it, such as mileage. So once we know some of those things, some of the things that can help on your valuation, there's three different ways to do it. There's market comparison, asset-based, and income approach. So market comparison, it compares your business with similar businesses that have sold recently. If you're below the $300,000 mark, that's a very tough mark. Or if you're near the 500,000, still very tough. When you get above a million, start to 3 million revenue, it's very easy to do a market comparison. Um, you know, a lot of times what uh, is happening in a situation like that when something is below a million in revenue is that someone's buying the client list. Now, hopefully, that's also follows the teammates, and if you have someone that's been there for 10 years and that will really integrate well into the next company, awesome. The buyers love that. Um, but so market research, market comparison. This next one is asset based approach. So this is kind of bad news in the cleaning space because a lot of our assets, a mop bucket, doesn't really have that much of an asset to it. If it does happen that you provide vehicles for each one of your teammates, then that could be a real thing, because someone could they could just get it valued at a local car dealership, and that would provide the value for your vehicles or for different things. If you're selling a physical building, again, that's something that is a real tangible, easy to assess the value of income approach. So this estimates the value of the business based upon the ability to generate future income. So what a buyer was going to do is going to look at the previous, 3 years, 5 years, and then project out. What they're going to want to know is what is your client retention rate? What's your marketing? Who is doing the marketing? Who's doing the quotes? Who's the one doing the engagement with the clients? If currently that's you, then that's a position that the new owner actually gets to hire someone in to do that. Something that's kind of risky for buyers and kind of makes the valuation of a $300,000 to $700,000 revenue company more difficult is that the owner is commonly doing those types of things. So it might actually take two people if your company's more at the 700,000 revenue mark. If it's hard for a buyer to know exactly how much time's going in, unless you actually have someone and you have a system to where you're like, yeah, I went on a 1 month cruise. I didn't have any internet, no cell phone range, something like that. Oh man, that is nice. That's going to help someone give you such a high valuation. You'll be excited because of that. Um, you know, there's different franchises when they sell to the next owner. It's using a performance-based rewards and digital marketing, you know, can help grow your company to help you with your valuation. So one way to enhance your valuation is to focus on reducing expenses. So, for example, those seller discretionary things. So maybe, do you really need that thing at the office? Do you need that car? Do you need that? Those will help you increase reducing those expenses, increasing revenue. So, dropping the clients that maybe are underperforming. That software is going to help tell you which clients are underperforming, Sometimes just tweaking those things a little bit can increase your revenue, and improving customer satisfaction. Again, documented of score systems. A lot of the softwares, it's really nice. They have it to where a lot of softwares will ask after each cleaning or after a preset number of cleanings, hey, how we doing? That documented thing makes it so much more smooth for a buyer to know. Um, Having operations that are well organized will just really help, especially if we can see as a buyer, here's what you're doing on a daily basis, and here's what your people are doing to create that system. So, gathering your financial records is a huge part of evaluating your business worth. In the next video, we're going to discuss how to prepare it more for sale, and we're going to cover some of those nuances that will really help you get the cream for selling your company.